So let's see some topic here. Okay. See, we have already like we were discussing yesterday. There was unfortunately a power cut. We were discussing that suppose a parent company has acquired subsidiary. The parent has acquired subsidiary on Jan 1st, 2022. So before Jan 1st, the period would be called as pre-acquisition period, correct?
Yes, sir.
And after this pre-acquisition period from Jan 1st, 2022 till December 2000, let's say like 22 would be what?
Post acquisition.
Yes, great. Post-acquisition period. Okay. So now the profits, for example, if I say parent has acquired subsidiary on April 1st, like 2022. December 31st, 2022 would be the end of the year. And December 31st, like 2021 was the previous year. This will be called as pre-acquisition period, which will be from Jan, Feb, March, okay, 3 months. And like 9 months would be post-acquisition period. So accordingly, the profit should also be apportioned. You know, pre-acquisition profits would never be apportioned amongst the like between the like amongst the parent and NCI. The subsidiary company, whatever the subsidiary company is earning, because subsidiary company is the investment for parent as well as for NCI. So I'm speaking about a subsidiary which is partly acquired by the parent. So in this case, whatever the profits these guys are entitled to get would be post acquisition profits. Okay. For example, let's say here. So they have given some question. So 20,000 is the total retained earnings at the end of the year of subsidiary. 60% of the subsidiary is acquired by the parent. So the 40% would be going for NCI. And in this, like 14,000 were earned prior to acquisition. So from this total, the retained earnings at the end of the year, I would remove the pre-acquisition retained earnings. So what I'll get 6,000, the post-acquisition retained earnings. Out of that, 60% would go to parent and 40% would go to NCI. Correct? So here is the treatment.
Yes, sir.
40% goes to NCI, 60% goes to the parent, and this is the pre-acquisition retained earnings. That's it. This will be going for the goodwill calculation that we have already discussed. Okay. Now, please do this question, all of you. I want you to try this question. I'm giving you time. Come on. See, I can do this. I'll give you just 5 to 10 minutes. I don't want to waste much of the time because I need to cover up the syllabus also fast. But you can try this question. Come on, fast. So this is the question. Okay. I'm just keeping it this way. Can you see this screen and like understand the question, or shall I zoom it?
Sir, can you zoom it?
Okay. Barely 2 topics. This chapter is done. Let me have a confirmation. Tomorrow, all of you have holiday or like working? Mr. Srinivas, you have holiday tomorrow?
No, sir, actually. But second half, I'm free, sir.
Achha, from what time?
After 2, sir.
Okay, then we can plan class in the afternoon tomorrow.
Okay, sir. Thank you.
So that by evening, everyone can be free. And
Okay.
you can practice even. So we'll plan accordingly tomorrow, 3 to 5 like that we can plan. We'll take the class on Skype. I'll send you a
Sure.
video today, Mr. Srinivas, so that you can watch. I've started one more chapter, first chapter, theory.
Okay.
Tomorrow I'll wind up
Okay.
that one and also consolidation, this chapter, both.
Sure.
Yeah. So almost all of you are able to understand the question. Share premium is given, retained earnings is
Yes, sir.
given. Yeah, pre-acquisition retained earnings is given. and the company did not pay any dividends. NCI is given at the fair value. Market price of subsidiary share are 2.50 prior to acquisition by the parent. Okay. So fair NCI should be taken at fair value. You can understand that point. This is the balance sheet. So I think almost all of you have taken the notice of this. So shall I just scroll down? Hello?
Yes, sir.
Yeah, I'm just
Yes, sir.
scrolling down. Yeah.
Yes, sir.
Now you can start doing the question. So you need to tell me what is that you got the value of goodwill after calculating goodwill and other things. I'm just waiting.
Sir, goodwill 25,000.
Okay. You can keep it reserved. I'm just writing here. Okay.
Sir, retained earning 54,400.
This is what you're saying for parent.
Yes, sir, parent. H.
Yes.
Sir, NCI is 13,600.
Okay. Okay, you've got almost also you can do the consolidation part.
Sir, how much is the goodwill, sir?
Okay, see, as you know, you will be taking this consideration transferred. Here the ordinary shares, like 50 cent into 16,000 makes it 8,000. Okay. And 8,000 in this seems 80%. I think 80% is almost given in the question. 80% of the Hinge company ordinary shares is acquired. 80% of the Hinge company shares are acquired by the Hinge company, correct? That's what they have given. So this 10,000 like is the value, and like 16,000 ordinary shares of 50 cent each in Hinge company they have acquired. So this makes it 8,000, correct? They paid 50,000 for it. And then what will you take? NCI. So what would be the NCI value? So how many shares are there? 2.50 into, just do a calculation, 10,000 divided by, I'll just tell you the shares. So there are 20,000 shares, correct? So there are 20,000 shares. How I got 20,000 shares? 10,000 divided by 0.50. The total number of shares is 20,000. 16,000 acquired by the parent. So 4,000 shares would be acquired by the NCI into, what is the fair value? 2.50. So can I say that 4,000 to 2.50 is 10,000? Every one of you, please tell me. Come on. Hello.
Yes, sir. 10,000.
So you should first understand how to do a question. Okay. 16,000 ordinary shares. Out of how many shares? 20,000 ordinary shares. How I got it? 10,000 divided by 50. So 0.50 cents. Then what will you take? You will take pre-acquisition retained earnings. That is almost how much? 15,000. You will take share premium. That is also there. Pre-acquisition. Correct? So we'll take them. 15,000. And share premium is here. Okay. So do you think it is only 15,000 is the pre-acquisition retained earnings or something else? Let's see. See what has happened. This question is a tricky one. The parent has acquired the subsidiary on April 1st, 2005. So on 31st December 2004, that means from December 2004 till April 1st, 2005, this period is nothing but pre-acquisition period. And whatever is earned after this period till December 31st, 2005 would be post-acquisition period. So how many months would be from April to December?
9.
3 months. Now what we will do is pre-acquisition retained earnings already given to you is 15,000. Let us check what is the total retained earnings in the question. So from that 39,000.
Yes,
Yes. Just a second.
sir, 3 months, how, sir?
Just wait. This is the total retained
Okay,
earnings. No? This is the total retained earnings. Am I right? Come on, this is the year-end balance sheet.
Yes, sir. Yes, sir.
So that is the total retained earnings. From that, I will remove pre-acquisition. How much?
24,000.
This 24,000 is from what time? For the entire year. That is from Jan 1st to December 31st, 2005. And the figure of 15,000 is on December 31st, 2004. So 24,000 again you need to bifurcate in 3 and 9 ratio. What will be that? Come on, do this.
6,000 and
3 months,
18,000.
6,000, sir.
6,000 and
18,000.
18,000.
18,000. So this is your post-acquisition retained earnings, and then pre-acquisition would be 15,000 already given plus
6,000.
6,000. That would be
So 21,000.
21,000. So is that what they have taken? Yes. And then ordinary share capital 10,000 is already given. So this altogether, when I subtract from this, I get 25,000 goodwill. Please, all of you have a look at this. If any doubts, you can ask me there and then.
So can you explain once again, sir?
See, 15, the total retained earnings is 39,000. That is on December 31st, 2005. Out of that, the December 31st, 2004 retained earnings is 15,000. I removed it. I got 24,000. Correct?
Yes,
Hello?
sir.
This 24,000 is
Yes,
from
sir.
what date to what date? January 1st, 2005 to December 31st, 2005. Correct?
Yes, sir.
But again, there is a division here, na? The division is like the division is made because of the April month, because the parent acquired subsidiary in the month of April, correct? 1st April.
April. Yes.
Again, from
Yeah.
Jan 1st to April 1st, you will be having the 3 months time. Correct or wrong? Hello?
Yes, sir.
From Jan 1st to April 1st, what is the time period?
Yes,
Not able to hear your voice. Hello?
3 months, sir.
3 months, correct?
sir. Voice,
See, you please check
Sir.
your connection, please.
3 months.
Damn, my energy levels are draining. So 3 months, correct?
Sorry, sir.
No. See.
Yes, sir. 3 months.
Please don't
3
take
months.
it either way. It's not your mistake, but my health is not that good today because of cough and cold. So that's what. Nothing more than that. Okay. You can't do anything because of the connection. No, nothing your fault. Okay. So you got it, this, sir?
Sir.
Rajesh, you got this?
Okay, sir. Okay, sir.
You got this, huh? Please tell me.
Yes, sir. 1st January to 1st April, 3 months. That when I got.
So that 3 months is also pre-acquisition
Sir?
period, na? That 3 months is also pre-acquisition period, correct or wrong?
Yes, sir.
Correct me if I'm wrong. So that's pre-acquisition. So what you should do is that 24,000, which is for the entire year, 3 months and 9 months, you should divide.
Okay, sir.
So 3 months when you divide, you get 6,000. Leave that post-acquisition thing that we will discuss afterwards when we'll be dividing that between the parent and NCI. So this
Okay, sir.
15,000, which is already there till December 31st, 2004, and this 6,000 for 3 months till April 1st is totally pre-acquisition retained earnings. All of you?
Yes.
Yes, Meghna?
Sir.
Yes, Meghna?
Yes, sir.
Yeah. Wilson, Marina, all of you comfortable? Yes? Okay.
Yes, sir.
Yeah. So this is what you have, and then you calculated your goodwill. Now, the retained earnings of the parent, the subsidiary, and then pre-acquisition profits removed. The post-acquisition profits are here. Divide between the NCI and the parent. So parent gets 80% and NCI gets the rest of the 20%. NCI taken at fair value, and that post-acquisition retained earnings NCI has got. This is the total value of NCI. This is the parent's retained earnings. And the entire question is almost done. Now the consolidation part is upon you, correct? So will you do that? Yes. Come on, finish that. Fast. Okay, if you have done, let me know. I will move forward. Almost all connectivity issues are going on, Rajeshwari, for you.
Yes, sir.
So
Now it's okay, sir.
what is your connection? Internet
Sir,
connection?
actually Wi-Fi, sir.
Yes, Wi-Fi almost. That's all right.
Mm.
You're using which company's connection, I'm asking.
Pathway, sir. I need to change this December.
Take that Act FiberNet.
Which one, sir?
Act FiberNet.
Acta, sir. Yes, sir. My father was also
Yeah.
saying that one only.
Now see,
This December.
everyone has everyone has issue.
Yes,
I'm
sir.
not saying that is almost always perfect, but maximum it is the best network in India.
Okay, sir. We were thinking actually because we have paid this amount now, sir, till December it is.
Okay.
So after that we will change it for sure.
No worries, no worries. So have you done the
Yes.
configuration? Shall I move forward?
Yes, sir. I will check once again, sir, in the recording.
Okay. So now let's
Better.
also go with this pre-acquisition losses of a subsidiary. So the previous illustration, let's take into picture as an illustration of entries arising when a subsidiary has pre-acquisition losses. So there is no profit here. This is the loss case. Suppose P company acquired all $50,001 ordinary shares in S company for $20,000. So 50,000 shares the P company has acquired in subsidiary for $20,000. Are they paying more or less?
Less.
Less.
Because it's a loss-making company. It's a bargain, na? Bargain purchase.
Yes, sir.
Negative goodwill would be there. Why? Because why would I pay more? Just I want to buy your company at less value, favoring that company. On 1st Jan this much, when there was a debit balance of 35,000, so already they were having losses, it seems. They were having a negative balance in the retained earnings.
Retained earnings.
Yeah, great. So in the years now, what has happened is January 1st, they acquired, it seems. After the acquisition from Jan 1st till 2004, subsidiary has made profits. So almost all they have wiped out that the negative balance, it seems. But we are concerned with the pre-acquisition or post-acquisition?
Post.
Free acquisition.
No, when it comes to apportioning the profit of the company, we would be only apportioning the post one, correct? There's no chance of goodwill calculation. There's a negative goodwill. Bargain
sir.
purchase, that would go in the P&L, correct? Now, that's one-time profit kind of. So this 5,000, what is there, would be there in the retained earnings now, correct? This has got this now, that has become a credit balance itself. So loss recovered, and this is there. Now almost all, how much is the profit totally?
40,000.
40. That 5,000 credit balance and 35,000 extra earned. Am I right? Please tell me yes or no.
Yes, sir. Yes, sir.
Yes, sir.
Yeah, all of you, please understand and tell me with confidence. Any doubts, please raise it. So consideration transferred is this, and 20,000. So what is that? Okay, now let's see that another data actually. But for 50,000 company, they paid 20,000.
So,
Okay, there was a debit balance also. Okay. So there
so,
is yes, who's that?
so
Please.
Meghna,
Please let me know, na?
subsidiary company makes profit of 40,000, leaving a credit balance of 5,000 mean what, sir?
Already there was a negative balance of 35,000, na?
35, yes.
Now they have earned 40. So they now what happened?
Oh,
Rest of the 5,000
okay.
is there, na? Yeah.
Okay, sir.
Yeah. Okay, ma. So net assets acquired is represented by the equity. and retained earnings is kind of the negative balance. So almost all still they have negative balance here, and the goodwill is 5,000. Okay. By seeing here, I could say negative goodwill, but by calculating, I could understand that there is a value here for goodwill because other things are there. Now, don't get confused. I think I made the things clear to you here after calculating. Now, 5,000 is the balance, and they have recovered these losses. So almost all 40,000 is what they have earned. So that completely goes to whom? The parent. Why? Do you think there is any NCI in this?
No, sir.
No, that's it. That means this question doesn't have NCI. So the entire thing goes to parent. So this is what is their retained earnings at the end of the year. That's it. Done. Please have a look through this. We'll move forward.
I think in India, sir, India gap, maybe once acquisition happened by the parent company, all losses or retained earnings, anything completely absorbed, maybe then zero value will come, sir, to the books of accounts.
So, sir, please come once again. Actually, really speaking, I'm just very like I don't have that good knowledge.
For
of
example, yeah, as per India's or gap accounting standards,
Huh,
so once acquisition happened in
huh,
the subsidiary company, so all losses, unobserved losses or depreciation.
huh.
So by default, it will collapse or it will be waived off, and fresh profits and fresh return earnings will be started. Is there a difference between IFRS and India?
No, sir, they have already taken these losses also here, na? They would have taken retained earnings, but they have taken losses here. That's it. In goodwill calculation.
Goodwill calculation purpose, you are saying. But
Yes,
in books of financial position, maybe that it should not be reflected the return earnings of the previous year pre-acquisition period losses.
sir, when
Thinking
they
it.
will be making group accounts, the pre-acquisition
Yeah.
things gone, sir, now. Because that already got
Yeah.
reflected in goodwill calculation.
Okay.
Now no use.
Understood.
Now totally post-acquisition things only will come into picture.
Okay.
Long time
Fine.
back, I used to teach CMA final, but
Yeah, actually, recently in my company happened actually acquisition done by the BillDesk. So last the 2018. So in that time, my company having close to retained earnings 35 crores negative.
Acha,
So
okay.
completely they cleared, and that too they acquired 25th of March, which is the end of the financial close.
This is a loss-making company and they acquired another company. That's great, sir.
Yeah.
Okay. Already,
Yes.
how come they acquired them? From where they got the capital?
Capital is a direct the mostly venture capitalists are there.
But those venture
And now again my parent company again acquired by the another company which is PayU.
Acha, okay. Now your company is acquired now.
My
But
company acquired and my parent company also acquired by someone now.
yeah, that's what I'm saying, sir. Your company acquired another company, even though
Yeah.
they were in losses. So the venture capitalists are great men, great people. They took lot of risk here then.
Yes.
That was a bailout
That's
package
what.
kind of to count to make it.
Yeah, that's why always I'm asking you about the last situations.
Okay.
Yes, sir.
No worries, sir. You can bring any of your doubts. Always welcome.
Thank you.
See, I am giving you some homework. Okay. Will you try? Now you should tell me genuinely you'll try.
Yes,
Okay.
sir.
Yes, sir. Yes, sir.
Yes, sir.
Just one question
Yeah,
I'm
we
giving
will
you. Rest of the things I will explain tomorrow and wind up. So, see, fair value in acquisition accounting is nothing but you should take things at fair value. That's it. For example, this question you would be coming across. You will be going for goodwill calculation. But what would happen is there would be a fair value adjustment. I'll explain this. Whatever the points I can explain you, that I will explain. Other things you can do. What is this fair value adjustment? It's a simple thing. Let's see the data behind this. See, P company acquired 75% of ordinary shares of S company on 1st September. At that date, the fair value of the S company's non-current assets was 23,000 greater than their net book value. So now you should do the fair value adjustment now. Yes.
Yes, sir.
Is there a fair
Yes.
value adjustment here? What is this fair value adjustment? When the parent wanted to acquire subsidiary companies' non-current assets, they were having a higher value than the net book value. They were having a market value, it seems, of that means suppose if their value was 40,000, in the market they were getting 63,000, it seems. So now they are asking from the parent to make that payment. Correct?
Yes, sir.
So what will you do? Rest of the things are no issues here. Just you should do the fair value adjustment here. Just you should take that because you're paying additional payment, na?
Yes, sir.
You are making an additional payment. The fair value of NCI is there. Your company's the net assets of the company which you are acquiring is represented by what, boss? Ordinary share capital, retained earnings, and revaluation
Surplus.
surplus. Correct? But here it is kind of getting realized. Here it is kind of getting realized. Why? Because they are selling the company. Correct? Yes. So there are two things. Please understand: revaluation gain or profit on sale of asset. What is the difference between these two, Rajeshwari?
Yes, sir.
What is the difference between profit on sale of asset and revaluation gain?
So profit on sale of asset, the asset is going out, sir.
Okay.
In revaluation surplus, we are calculating the revalued amount of the asset.
You just repeated. I don't know. You just like kind of passed on the question to me again.
Sir, profit on sale of in my view, profit on sale of asset means we are getting the amount even the
Yeah, good,
Sir,
good.
could you
You're
hear me?
coming near to that. See, profit on sale of asset is
Sir,
nothing
can
but
you
it
hear
says-
me?
I can hear you. See,
Yes, sir.
profit
Actually,
on
there's a power cut.
Acha, okay. Profit on sale of asset is a realizable nature income. What is that?
Realizable nature income.
So realizable nature income in the sense, when you'll sell the asset, you'll get the profit as a cash payment in your hands. That means you'll be realizing it. Some asset which is of 10,000, you'll be selling at 15,000. So you get 5,000, correct?
For time
Hello?
in exchange for consideration.
Hello?
Yes, sir.
Yeah, shall we go ahead? What was like?
Yes, sir.
Yeah. So now, come on, all of you try to remember, don't check all the backside videos and try to get the knowledge, okay? Please.
Prof.
Yeah. So now this was like revaluation surplus, revaluation gain. Now what is the revaluation gain? See, revaluation gain is a non-realizable nature income. That means it is just the valuation what you're doing for your asset. You are getting a, you have just called a valuer to check the value of your asset, and he says that you're getting a higher amount in the market. But here you are not selling it in actuality. Are you selling it here?
No,
Yes.
sir, we are not selling.
You're not selling. You are just kind of you're just kind of trying to see what is the value you can get today if you sell this. But in actuality, the sale is not happening. So that is the reason why, since it's a non-realizable nature income, we will show this in OCI, other comprehensive income section. And this particular profit on sale of asset would come in the statement of profit or loss. So now, anyways, this particular thing would again come in the retained earnings or equity section, correct? How it will come in the equity section? If at all there is a profit on sale of asset, that will be going into retained earnings. How that will
Retained
get
earnings.
that will get mixed up with the net profit. And
Yes,
if it
sir.
is revaluation gain, that will come under the revaluation surplus
Revaluation
section,
surplus.
and again both come under equity. So both ways you are going to pay the additional amount, correct?
Yes, sir.
So that things would come to, that means you're going to make the additional payment, that's a secondary matter, but you will also add up this to the value of that company, correct or wrong? Please tell me. I'm asking to all of you, you would add up this to the company's value, correct or wrong?
Yes, sir.
Yes, sir.
See, all of you saying yes, but did you understand the concept?
Yes, sir.
Yeah. So this would also add up to that company's value because they want it. That's what they're saying. You pay us. Now altogether 64,000 is the value and goodwill is 5,000. Rest of the things, you need not worry. You can do this question. I don't think there is an explanation required. Only this was the thing I wanted to explain you. Finish this problem as a homework today. Okay. Then my task, what I
Sir,
have is,
can you,
please tell me.
sir, can you show the question, sir?
Rajeshwari,
Just-
this question
yeah.
is